95% of traders lose money. That's not a made-up number. That's documented across every broker. It's a legal requirement for the broker to specifically mention this on every single one of their websites and platforms. And the crazy part about this, it's not even that trading is difficult or trading it's some secret magical thing that is so hard for people to solve. The main reason, it's because most people make the same 5 mistakes over and over. I was one of these people. I blew a lot of money at the start of my trading career. I made these mistakes over and over until I learned from these mistakes and fixed them that made me profitable in the long term. And that's why now I'm teaching you the same mistakes so that you can avoid making them yourself. And let's be honest, if you're watching this video right now before you have blown your first account, you're already ahead. So let's start with the 95% statistic. Why is it real? Brokers in the UK and EU are legally required to publish the percentage of retail traders that lose money on their platforms. And in most instances, that ranges from 95% to all the way up to 98%. And it's not because the market is rigged. The truth is, it's because most people treat trading like gambling. They treat the markets like a casino. But then if you know the truth behind how casinos work, you know that you can't go into a casino and expect to come out profitable. It's not really a viable way of making income. Casinos always make you lose money. The house always wins. The same way when it comes to brokers, you deposit money, the broker actually wins in the long run because 95% of people actually end up losing their deposit by losing trades and making mistakes over and over again. But the small percentage of people that actually makes money, those are the smart people, and they know what mistakes to not make. Mistake number 1 is risk management. Most beginners never think about risk management when they place their first trade. All they think about is profits, when the key is actually thinking about risk management. If you have no system, no plan in place for risk management, you're already losing the game. You have to understand, if you have an account size, let's say $1,000, and you risk 15%, 20% of the account per trade, realistically, you're only gonna have 4 to 5 losing trades before you blow the account. And I know most beginners think, oh, I'm not gonna lose 4 trades, I'm not gonna lose 5 trades. That's so unrealistic, right? But that's where you're wrong. Most beginners lose way more than 10 to 20 trades, and this is from my experience and from the experience of other profitable traders that I personally know. 10 to 20 consecutive losses is very, very standard in this industry. That's why the clear-cut recommendation for risk management is do not risk more than 1% per trade. You can risk maybe 1.5%, 2% per trade if your setup is an A+ setup. What that means is an A+ setup is a setup that you have back tested and you have data behind it, and it's proven to be profitable 8 out of 10 times. So you can risk slightly more because it's a risk worth taking in that case. But if you know your setup is a regular setup, in that case, you should risk 1% or even less in some cases, because the less you lose as a percentage of your account, that will also help you psychologically. And if you think about it, at 1% risk per trade, that means you need 100 consecutive losses to lose all of your money. That is very, very unlikely. Mistake number 2. Revenge trading. Most people take a loss and they go back into the markets with another trade. They take another loss and they enter another trade until they win the previous loss back. Then they're trying to win the other loss back. And this is called revenge trading because you are now deviating away from your system. You're letting your emotions control you. Just because you lost the previous trade, that doesn't mean you need to place another trade right away to make that back. Because that trade is now not based on your system. That trade becomes based on your ego. And that is exactly how one bad trade turns into a blown account in one single session. And I want to tell you now a personal story of mine. This is actually when I started trading. I deposited around $1,000 into my personal account. I was trading the account with my system. I had a backtested system with data behind it, and I was so confident. But when I deposited real money in the account and the first trade that I lost, that hit me. I lost $100. That was 10% of my account. So already I was not following good risk management, and then I lost $100 out of it. But then on the other side, my mind was thinking, I could have made 100, and that would have been a nice dinner I made in just a couple of seconds on the charts. And that's when, after that loss, I went back into the trades again. I wasn't even looking for my setups anymore. I was now making things up. I was like, okay, I had stop loss. Maybe price is gonna continue now in that direction. What I should do is try to follow the direction. I enter another trade. But guess what? Price reverses, hit stop loss again. and again and again until I can't take it anymore. I'm already down half of my account, and I know at this point either I keep doing this revenge trading and I blow the full account, or I stop and actually go about it next day and slowly recover it. But guess what I did? I blew my account. Your system plays out your edge over hundreds of trades, not over one single session. So worry about long-term consistency instead of making money every single session. One loss means nothing unless you turn it into 5 or 7 or 8 losses. Mistake number 3. Over leveraging. Most people think, oh wow, my broker offers 1 to 1,000 leverage, 1 to 500 leverage. I want to turn this 500 pounds into 50,000 pounds in just a matter of days, a week, a month. But guess what? That's exactly why they end up blowing whatever their initial deposited amount was. Just because brokers offer such high leverages, it doesn't mean you have to use that leverage. Essentially, wipe out your whole account if you're on a very high leverage setting. Beginners see leverage as an opportunity, but professional traders see it as a responsibility. There is a very simple fix to this whole over leveraging situation. Stop calculating your risk and your trade size based on how much money you want to make. Calculate instead based on a fixed percentage of your account size. That is the best and the smartest way to have the best risk management for your trading. Risk management and leverage go hand in hand. If your risk management is controlled, leverage won't really affect you that much. But if either one of these, it's not working together in sync and you're favoring one over the other, that's when you're gonna end up most likely blowing your account or lose a big portion of it. Mistake number 4 is having no trading plan. Most beginners go on a chart, they see price action, they see different levels, and all they think is, oh, this looks like something that's gonna go up, this looks like something that's gonna go down. But guess what? That is not how trading works. We are not guessing. We are not reading random painted candles on the chart. That's just guessing with extra steps, and that's not what we do. A trading plan is what answers all of your questions before you actually open a single trade. You have to ask yourself all these different questions. What pair am I trading today? What session am I trading? What does my entry criteria look like? What am I actually looking for on the charts? Am I looking for a breakout of a zone, or am I looking for a rejection of a certain level, or am I looking for continuation after a breakout or a continuation followed by a pullback? All these things need to be considered and written down exactly in a checklist format. Every time you enter a trade without a plan, you're making a business decision for your business. And every decision that is made without a plan, most of the time it's a wrong decision. So let that sink in. Because when you have a plan, all you're doing is you're basically executing the plan. You're looking for a setup and you're entering the trade. If you don't see a setup, you don't do anything. But now if that plan is not there, now you start to force things, you start to see things that are not there, just for the sake of trading. I personally spent years building a fully mechanical plan and a fully mechanical trading system, an edge in the markets that is consistently profitable long term. I spent thousands and thousands of hours on the charts, looking at different things, analyzing, collecting data. My current strategy has over 14 years of profitable data, and that's all on a 5-minute time frame. I personally trade breakouts at the moment on the Nasdaq 100. Same entry, same exit, same rules every single time, same stop loss, same TP. That is the beauty of having a plan, a system in place, a mechanical one at that. Mistake number 5, emotional trading. Fear makes you close winning trades. You might be 10 pips away from hitting TP, but you close your trade. You might be 10 pips only in profits when your TP could be 50 pips, you close your trade because of fear. But on the other hand, you have greed. You might be 50 pips in profit, already close to your TP, but you extend your TP now. And now that's greed. Now that trade pulls back, break even, stop loss, you lose money when you could have closed at your TP, right? What you need to understand is the market has no feelings. You can't be hoping and going into the markets and praying, oh, I'm gonna make money today. The market does not care about anyone. It doesn't care about me, it doesn't care about you. We are both market participants. We're both the same. The only difference between me and you is I have a mechanical system that's backed by data. So every decision I make is statistically gonna favor me in the long run. So maybe today I lose my trade and you win, but I know if I took 100 trades and you took 100 trades, I'm gonna 100% be profitable at the end of those 100 trades, because statistically, every 100 trades, I'm always profitable in my system. That's why I put so much emphasis on mechanical. I want all of you to focus on making mechanical systems and stop watching all these stupid videos online, ICT, SMC, Malaysian support and resistance, supply and demand, all these things, guys. It's not gonna work. It won't work. I've spent hours and hours, hundreds of hours, thousands of hours testing every single one of these concepts, and I made no money. I only lost money, guys, and I wasted so much time. That's why now I'm telling you what to do, because I'm kind of saving you all this time. I'm like your big brother saving you all this time. I've done these mistakes myself. I don't want you to make the same mistake. So please listen to me. Go and find a mechanical system. By find, I mean you have to create one. You have to put in the hours, collect data. You're not going to be handed over a mechanical system, because a mechanical system, it's like a magical strategy that someone has put so much work into and they just give it to you. Who will give that? No one. If someone's giving that to you, they most likely want money from you and they're just fooling you. The top percentage of traders, including myself, this is how we avoid all the 5 mistakes I've mentioned so far in this video. We treat trading like a business, not like a casino. Every trade is a business decision, so we take it very, very seriously. We don't gamble on our decisions in our business, and we don't make hundreds of decisions for our business every single day, because that would be very foolish. A successful business makes a couple of good decisions every week. We have a written trading plan that we follow exactly every single day when we go on the charts. We never guess anything on the charts. We don't hope for something. We only follow our system. We always risk a fixed percentage per every single trade, no matter what. Whether that's 1%, 0.5%, or 2%, because we don't want to skew our overall data. We want to have a ROI at the end of each month, at the end of each year. And if that ROI of 2026 is 10%, but then 2025 was 50%, now how do I know what the actual ROI is? Because if 2025, I risked 5% to make that, and then 2026, I risked 0.5% per trade. You see the difference. That's why it's so important to keep your risk consistent. Accepting losses is also part of the process, and every single top trader knows that, because we don't let losses define us as traders. We let our system play out and the edge play out over a long enough period of data that we know at the end we will be profitable. Now I'm going to give you an action plan that you can follow yourself, and hopefully if you follow it exactly and you put in the hours and the work with discipline and dedication, you're certainly going to see good results in your trading. Step 1 is to pick a pair. I recommend you either pick NAS 100 or GBP USD. You could also have a look at gold, but gold is extremely volatile, so I do not recommend you picking gold right now as a beginner. Step number 2 is to write a step-by-step plan on how you're gonna take your trade, what exactly you're looking for. Entry rules, exit rules, TP size, stop loss size, all fixed. And how are you gonna have these rules? By collecting data. Backtest, backtest, backtest. Then forward test for a little bit, and then go live. That's how you do it. Step number 3, never ever risk more than 1% per trade. For now, just stick with 1%. Never risk more. Step number 4 is to backtest your system for at least 6 months to 12 months. Anything less than that is pure gambling. The data will lack key things such as exposure to different market regimes. You might have 1 month of very profitable data, but then was that month consolidation? Was it bullish? Was it bearish? Have you really gone through every single market regime in your backtest? That's something you have to be really, really careful about and consider when backtesting. Step 5, after every single loss you take, close your platform, close your computer, close your app, your MetaTrader 4, your MetaTrader 5, and leave. It's okay, guys. If you lose a trade, it's okay. Just leave. For that day, you're done. Step number 6. Track every single trade. Journal every single trade. I want you guys at the end of 6 months to have a whole collection of data. See every single day that you won a trade, every single day that you lost a trade, and make sure you write something, a small note every single day. Today, I increased my stop loss because I felt greedy or I felt fear. Write that down, because after 6 months, when you review what you wrote down, you're gonna be like, oh, I did such a silly mistake 6 months ago. I would never make that now. But that's gonna help you, because you're gonna know what mistakes you've been making a lot and you're gonna be able to change the mistakes that you still make. Every single mistake that I've mentioned in detail in this video today, guys, I personally made it myself. This is all fury. This is all coming from a guy that's made $500,000 trading, guys. And now I've finally mastered the basics of trading. I don't make these silly mistakes anymore. Now the difficult part for me is to scale up, to make millions, to make $100,000 a month. That's the hard part for me, and I wish every single one of you can be in this position one day. Comment below every single mistake that you're currently making in your trading and be honest. I will read every single one of your comments.